Good morning, everyone. Welcome to the London session. We may have some stuff developing in crude oil that I'm going to talk about in a minute. So first of all, let's have a look at the very massive weekly chart. Yesterday, I was talking about some demand levels and supplies that we might be visiting. Well, we're back at this demand at quite some speed. So it means that rather than us spending time away from the demand, the price just kind of smashed back into it. That's usually not a great sign if you want to run a reversal trade. You do not want to see prices coming back to some of these very relevant levels at like super fast speed, right? They need to spend some time away. So just from that point of view, whilst this could be a range that we are in, it could be that August is now going into a bit of a sell-off mode. So let's have a look at the daily chart just to see if we can find some more clues. So again, daily chart showing that same demand, but we do have a lower low from a while back. And again, today we're trying to unglue ourselves from the Asian session to the downside. And that, like whenever you break out of the previous session range, not the previous day, but the actual previous session, in this case that will be Asia, there's a pretty decent chance that that will be your direction for the rest of the day. Now, if it starts to turn around and go back into that range, then we'll have to reassess and maybe have a couple of scenarios to account for that particular scenario too. Right now, on the profile, if I go down to the 30-minute chart, let's just quickly jump there. The first hour of London, I'm just trying to adjust this. Let's move that there. Okay, so the first hour of London, let's do another rectangle. Just to delineate that. These two candles saw a drop. And then a pretty strong breakaway from that area. So initial balance was created. So I'm just trying to draw this out. Okay, there we go. So that was the initial balance, this little yellow box. And you can see that the move away from it is pretty strong. Now, I have a wide-ish stop loss here just to run a little hypothesis to see how the price is going to act. Initial balance low could be a reversal area because that's where we came from. But really, if this move has any legs, you know, we should be seeing it fairly soon. But again, I don't want to skimp on stop losses on these sort of feeler trades because they're just there for me to figure out whether there is enough movement in that direction or not. I really want to see another lower low being printed at some point pretty soon. One thing that I've noticed about crude oil is that it has been moving during London, or more accurately during the overlap. So this could be a little bit too early for this move, but it has gone into a downtrend, right? There's not too much doubt about that. The fact that we fell very deep into the demand area, that could be a bad sign for any potential longs, and it could signal a further downside. So we'll see whether this has merit. The danger here, because whenever I'm creating these scenarios, I do put them on a piece of paper and I actually print them out as well. So the danger here, I like to do the pros and cons. And, you know, if we are in a demand, it could be that we start to reverse at some point. So that can be your kind of second non-biased view of what can happen. So the first one is the obvious stuff. We are dropping into demand pretty quickly. We are breaking away from the initial balance with quite some distance and speed. We are below the Tokyo range, right? All of that is bearish signs. But anything can happen, right? This is why we cannot have a full bias going into trading. So, like I said, I have one lot feeler trade here. So let's see how it behaves around the initial balance first and foremost. If we start to fail the auction, there could be the second hypo where we actually look at the demand that was created at that reversal and then try to use that for a more rotational trade. There are some statistics to support the double break of the initial balance on crude oil during London in the last 6 months. But if I maybe look at I'm just going to have a look at the 3-month sample size and then also the 1 month, because that can sometimes bring me some extra stats about the more recent behaviors. Now it's still pretty strong. So if I look at Edgeful, this is the 1 month 1 month stat. So single break is actually 83%. 3 months is 63%, and 6 months is 67%. So all of the stats, as I'm kind of increasing and decreasing the sample size, they tell me the same thing. They tell me that the single-sided break is the highest probability trade. So if it goes to the other side, it would be a sort of a lower probability setup. And yeah, so we'll see what happens there, but I'm just kind of jumping through some other stats. Okay, so really we need for the price to stay below the initial balance, okay? So we'll see. Whoops, what happened there? I lost one of my screens. There it is, okay. Need more caffeine, obviously. Right, so initial balance here would have probably been a better choice, but like I said, I wanted to run a feeler trade. So we'll see. I'm going to leave that alone and see what happens. Let's have a look at gold, because gold is starting to scream to the upside. Gold reaching all-time highs. That's pretty crazy, right? Having a look at the weekly chart. Wow, look at that move. That's pretty strong. All right, so nothing really to rely on apart from the previous high, I suppose. So let's mark that. Still trying to get used to drawing stuff on Topstep. All right, so crude oil going back into initial balance. So that one is not doing what I expected it to do. So we're going to come up with we're going to default back to second, third, and fourth hypo for the day. Yeah, so the only thing that I can think of on gold, I need a line. Yeah, okay. So we had a previous high. This is a weekly chart, so it's massive. We had a previous high that was reactive. So it literally like touched it and bounced away from it, which kind of speaks to the strength of this move. And whenever I get into no man's land territory, I want to see how profile looks for that day, even though the open sentiment and the overnight inventory may not do that much for you. So, for example, if I go down to, let's just jump through some levels to see what's happening. Again, going higher than Tokyo and Asia session. That's quite bullish. So similar situation to crude oil, but this one's already massively broken away from it, whereas crude oil is now kind of knocking on Tokyo lows. So gold is already smashing through the average session ranges for London that we normally make during the first part of London. So from 8 o'clock London up to about 1:30 p.m. my time. And that means we could have a higher volatility day today. So I'm just going to check what sort of releases we have today, because Tuesdays we usually have some stuff. Although today that's not the case. We have some Canadian numbers which could impact crude oil more than it does gold. So yeah, it's very, very light. Very light. At 10 o'clock we do have the Eurozone CPI. So that could be something to look for if you're trading DAX. I looked at the DAX timeline. It is planned for the start of November. So that is when they're planning to get us Eurex products. So it is being worked on. So yeah, nothing really is a catalyst today. Okay, that's fine. So gold, let's go down to the 30-minute chart. We're stepping outside of the initial balance for London. And this was the initial balance, so these two candles here. And we exited, but now we are creating a bit of structure here. So it's not the strongest move yet. Why? Because we have the price still staying in the candle range of the previous 30 minutes, which is not that strong. So we'll see whether we can break out of that and actually leave some single prints upside. And that would open up a possibility for the prices to keep going higher all the way to 25.69.4, which is my average daily range. So still, quite a bit of space there. But what tends to happen sometimes if they cannot break through into another higher high is that they run out of steam and they go into failed auctions. So, a little bit dangerous to be doing failed auctions at all-time highs, but not impossible, because sometimes you could have these like liquidity gaps that simply bring the price down pretty violently. Okay, let's have a look at a couple of questions. Jesse James says, "Good morning, Dee. How are you today? What is our sniper game plan?" Well, this is what we're trying to do here, right? So you are not sure about sniper game plan because we are in August, and August can be a little bit strange. Like, one thing that I have been noticing for London across the board is that the prices keep missing the average session ranges. And then even yesterday, ES, during its main session, it sort of ran out of steam way below the ADR and ASR levels. And that means that even though things are moving, the moves are not actually reaching their own statistical averages, if that makes sense. And that can be a sign of just like low volumes and overall reduced liquidity. So you have moves, you can have like very nice one-sided moves, but they're driven on low volume. And if you look at ES the way it was, actually, let's have a look at ES here. this was the entire yesterday's session, right? So initial balance, kind of rangy, and then they broke out. And this whole move, compared to what we had the other week, which was like pretty strong and it just kind of kept shooting up in no pullbacks. And this is like minimal pullbacks, but there's still some pullbacks. So we had, upside move, bit of a slowdown, upside, bit of a slowdown, upside, bit of a slowdown, then a big pop. I was actually in on that. And then, basically that was it for the day. This was the end of the session. This to me kind of looks like passive buying, just kind of, let's just, keep buying it. And from that perspective, anytime you want to short this, it's generally not a good thing. But there is a piece of statistical data that we've been talking about on TopstepTV, is that over the last 5 years, that actually takes in COVID into consideration as well. So over the last 5 years, no period has had more than 8 days of straight up movement. Yesterday was the 8th day on ES. So I'm not opposed to trying shorts in equities at some point today, but we'll see how that happens. And again, wouldn't short it during London, because what I've observed over the years is that any kind of trends that tend to happen, and they kick off new trends or reversals, they tend to happen for the cash session pretty late in the day. They're not necessarily, the reversals are not necessarily started very early in the day. So, I prefer to wait until New York lunchtime and then kind of express my position in equities, because statistically those kind of times do lend themselves to like more volume, because you have bond markets that are closed and then those traders going to go into some equities trading, and that causes an extra influx of volume to come into the range, which is why we have power hour, right? And then you have the MOC imbalance at the end of the day. I have a bit of a naughty name for the last 10 minutes, which I'm not going to be talking about today. But yeah, so let's say they mess around for the last 10 days into the MOC numbers. And generally, if you know where to look, it can actually bring some nice juicy moves that don't last very long. Jesse James also says, Dee, what do you use for the London session for initial balance? Is it 7 a.m. to 8 a.m. BST? No, it's 8 a.m. to 9 a.m. BST. So we are in London. This is the London session, and we go with the daylight savings. So obviously we have the weirdness in March and weirdness in November. November is less painful because it's only for 1 week, whereas March is a horrible time of the year when everything is a little bit topsy-turvy for 3 weeks, because we change our daylight savings clocks and the US doesn't, or vice versa, right? So it's like for those 3 weeks we're kind of out of sync, and then in November the same thing happens and we're sort of like lagging. All right, gold is making a new higher high. Crude oil is definitely reversed, but it's now kind of reaching overnight VWAP. So I'm still very skeptical about this this move back into the initial balance. So maybe I can default to the second hypo, which would mean not catching it here. It's a too small of an initial balance size for a failed auction. So my second hypo is a neutral day. So to go all the way up above the initial balance, which is at 73.27, and then to look for a fade of that. So, you asked me about sniper moves. Well, that would probably be one of those. Just to wait for that elastic band pull on both sides, expansion of the range, and then a ping back to the middle. But it will depend whether the middle is far enough away. Because if the middle is like, 15 ticks away and that's all we have to work with, that's not a great profit margin for me. I want to see at least like 40 ticks of available space before I get involved. The third hypo that I have here is that we bounced from overnight VWAP into a setup that I call, Mark Stoker's method, that I call the weakness inside initial balance. And what that does is to look for obvious areas inside the initial balance that can bring you the weakness. And if I go down to a 15-minute chart, there is a bit of supply here around the VWAP area. So if this 7306, which is a nice round number too, if it can give us some sellers that step in, that would be an alternative to that huge move that I was expecting at the start, given how fast and furious we left the initial balance. But now we're back inside it. So second hypo would be weakness inside initial balance. Third hypo would be neutral day type. So let's look at the price action. I'm not going to look at smaller time frames because here I'm looking for a bigger chunk of the move. And getting too caught up in the low time frames is not really a good sign for anyone, especially this early in the morning. Stefan says, please also watch. Yes, is it going down? Is he going down? We usually call it a she. Is it going down to 5607 as a target? I don't know. I don't have a crystal ball, mate. Nobody knows how far the move is going to go down to. I can tell you where the average session ranges are on ES. That's the best that I can do, probabilities. So we have quite a lot of space for the average session range on ES. That is located at 5609. But before that, we do have the New York session value high from yesterday, which is at 5620, which can be a reversal point even during London because that is its main session. So naturally, the distribution curve from that session can be reactive even out of hours, technically. But again, we still have the Tokyo low. We have the Asia low, which is another third orientation point pretty close by. And I would argue that that's the very first area, and that's 56.25 and a quarter on ES. So you have three areas that you need to get through before you get to your 56.07, which I think is a pretty ambitious target, especially for London. So yeah, maybe during the regular trading hours we can look at that, but yeah. Okay. Morning D, I've never traded CL before, only NQ. In your opinion, what are the main decision-making differences between trading in the NQ and CL? What sort of stuff are you looking in CL? CL is a tough cookie to crack, so I'm going to say that, especially these days. It was a little bit easier sort of in COVID and over the last sort of 3-4 years, but now we've had most days that have kind of come down into some lower ranges, but recently we have been seeing London making all the moves, so we'll see whether that rings true today. But a few points to take with CL. It is very time-oriented, so not time candle-oriented, but actual time, when things should happen. Typically, the way I look at CL is that in the first part of the NYMEX session, you get to have these reversals that happen at some point from the end of initial balance all the way up to sort of euro close and a little bit past it. And then sometimes if that reversal happens pretty late into the euro close, you can actually hold that trade all the way to like almost half an hour before settlement, which is 7:30 my time, PM. So, you would have a trade that will last at least for like 90 minutes. But if you don't get the reversal, now yesterday we had a pretty early reversal that did go for I think about 70 ticks or so, And I wasn't trading it, I was watching it though, and then it started to go into a fierce trend, so I managed to make a little bit of cash on that. But here is the reversal yesterday, okay? So we had the initial balance, so this is a 15-minute chart, so the initial balance was like this. Then again, attempt at leaving, but because of that reversal behavior that I was actually talking about yesterday on this stream as well, I said that at some point the price can reverse and then go for at least 40 ticks, right? Oh, somebody's being sick. Sorry. Sorry, one of my dogs just threw up nicely. Okay, I'm going to have to deal with that later. The life of a dog mom, eh? I don't know what's up with him. Right, so reversal that I talked about yesterday. Here it is. So very spiky reversal, but we go into a bit of a fake out failed auction. And then, you know how just a minute ago I was talking about that weakness inside initial balance? That is something that I'm looking for today in crude oil around VWAP or somewhere around there. And then if that doesn't come, we can look at the other side of the initial balance as a third hypo and a neutral day type. Well, this was the weakness inside initial balance. So we had initial balance, we go outside of it, we reverse, and then go for, lo and behold, about 44 ticks. This is the power of stats, guys. So it reverses, and then after the fact, after the reverses, you have 40 ticks of space to run it. Now, in this case, it didn't die out, but it actually went into a jump off a cliff, and this happened into the euro close. So here we go. Everything working as it should during the regular trading hours. This is what I want to see, guys. Like, what we've been getting for the last 8 months or so is that it sort of does a flimsy 30-tick reversal and then nothing. It just kind of gets locked into a 15-tick range and goes nowhere. But this is what it looks a little bit more normal to me. So this is why I'm diverting more attention to it today. It is my main market. It's been, you know, apart from DAX, but it's been very painful not to have my main market and then not to have DAX either. So, you know, I've been kind of trying to grasshopper around different products. But yeah, very glad to see crude oil kind of coming back into some of its statistical norms. So we have something I call the post and white cut reversal, and then another reversal into the euro close that pretty much goes, again, very statistically probable, to my 6:30 p.m., an hour before settlement, and then goes into a rally into settlement. So that's another 40 ticks. So that's the kind of structure that you will be looking at. So I call the post NY cut because there's such a thing called the Forex option expiry, referred to as the NY cut, which is 3 p.m. my time, 10 a.m. New York time, 9 a.m. Central. And for some Forex linked instruments like crude oil, it is very heavily connected to the Canadian dollar. Anytime there's a big sort of option expiry in there, you can see these sort of moves. And I find the direction by time of day. So if we are post and white cut, I'm looking for a reversal of some sort. If we're going into a euro close, I'm looking for yet another reversal and then running the move, whatever it brings me, all the way up to 6 p.m. And then from 6:30, 7 p.m., this will change. You get yet another little run into the close. So whenever the market starts acting out outside of those statistical time day trading time zones, I call them, that is like oddity and anomaly. And then this year we've seen that anomaly just kind of, I mean, I suppose it was still moving in the same way, but there was not enough movement. It was like 15, 20 ticks. It's like, what is this? So yeah. So yeah, hopefully that helps you. Brent Ellenberg says, good morning, Dee. 15-minute chart trading advice worked great for me as a beginner trader. Made $3,000. I don't have a fancy soundboard like Eddie, but Round of applause for Brett. There we go. So we get off 1 to 5 minute charts and you start focusing on 15 minutes and suddenly you see some success pretty much immediately, right? Now, I'm not saying that from now on you're going to be consistently profitable and this is it, but it's going to make things a lot easier for you. A, it slows everything down. B, you get more accurate chart patterns that will actually have some sort of relevance rather than, 1 minute on Jesse James says, D, do you use FVG with extreme high-low liquidity sweeps? I have no idea what that means, okay? But if you're looking for liquidity sweeps, I call them just stop runs. They're not, they are liquidity sweeps, but I see no reason for fancy names. So let's try and keep it simple. I use enough fancy methodology from the profile. Which again, I try to simplify. In interbalance, nothing more than first hour of trading, but it's quicker to say IB than first hour of trading, or first hour of regular active trading hours. So we have like short things. But I do know that this terminology is from ICT. I'm not an ICT trader, never looked at that. Even though obviously every concept that is based on price action and looking at supply and demand areas and stuff like that will have similarities, right? So we have, he calls it liquidity sweeps, apparently. I call it stop runs. Why? Because, well, if we're looking for, let's say, go back to this crude oil trade. So if we know that this is the edge of initial balance and we are looking for a neutral day type and then maybe a reversal, although I can see that now VWAP is causing some trouble here. Well, that liquidity sweep would mean nothing more than a stop run by the market makers before they bring it back into the middle again. So that, to me, would just be a regular stop run. And those setups are only appropriate if you do get a neutral day type. You can't really have liquidity sweeps in the middle of the range because that is not where people's stops are located, okay? Nobody in their right mind is going to look at this area here and go, I'm going to place my stop there. Why? Because we came from here. So all the market makers will be looking at people who are placing their stops at obvious areas, and this is not an obvious area. 73.21 is not an obvious area. 73.34 is an obvious area. So rather than getting your stop smashed in there, it's better to look for an entry around there. Now, this is where low time frames might help you. This is where my equivolume candles can help on a 1 minute chart and looking for, a shakeout exhaustion candle and then a reversal back into range. You have to have that reversal. Otherwise, there's no setup even on a 1 minute chart without that. So whenever you're staring at super low time frames and looking for those liquidity sweeps, there are very specific things that you need to see and to be super, super selective over what type of a signal you will actually take. Dolby and me a while back, we did a great crude oil trade on the house account. That was the stop run trade. We had a neutral day already. We went all the way down to the other side, then took out the stops of whoever was there. Then we had that big pop and a reversal. We entered the trade, suffered maybe like 5 ticks of drawdown, and then that trade went for full 3R multiples all the way to the other side. I'm not sure we held it all the way through because I think MP kind of partialed out and was pretty much out, I think by the time we got to about 40 ticks or so. But they're not going necessarily for huge trades anyways. However, it did go to, full 3R target. And that was it. That was the kind of trade. Now, whether we get the same type of a trade here, so neutral day and then stop run and a reversal, we'll see. But for now, VWAP is causing some trouble, although we have reclaimed it on a 15-minute chart. However, I'm sticking with the 15-minute chart for this particular setup because I'm not looking for the stop run type setup yet. So Jesse James, to answer your question, no, I do not use ICT concepts, but I do use things that are logical in light of whatever the day type we actually have on the day. Stefan M says, but what about picking the small nuts till the US session begins and make a break till the US shows up and makes the trend? The problem with that is that you're going to get a lot of paper cuts if you're not particularly skilled at scalping. Scalping for small ticks. Okay, let's actually redefine scalping. Any scalper that you see, including Nick for a tick, does he do 1 million trades per day? No. How many trades do you see him do? 2, maybe 3 per day. Is he a scalper? 100%. But does he do 50 trades per day? No. What does that tell you? Do you think he sits there and clicks buttons, or does he wait until his setup comes up and then takes a small chunk of whatever the move happens, however the move happens in the next few sort of minute, or sometimes even a few seconds, like he's in and out very quickly. But he usually trades about 3 trades per day. Okay? So you telling me that just tells me that you have no idea how to actually scalp. Okay? I'm going to be totally honest with you. I'm not trying to be mean. Okay? I'm just trying to be very, very realistic with what people do that harms their accounts the most. Clicking buttons thinking they're scalping. What's going to happen is that you don't have a setup that you're looking at. You're just clicking buttons, okay? And then you're going to get very low accuracy, or you're going to get very negative risk rewards. But you're going to do all of that work, all of that hopping in and out of trades, in and out of trades, in and out of trades for not a lot of gain. And when you do that, eventually you lose the plot and those paper cuts start to mount up. Just like the base hits can mount up in the right sort of environment, and I'm not going to do a base hit trade if I have a big reversal area staring me in the face offering me 70 ticks. But if I have a neutral day type with a tighter range that's offering me a stop run trade for like 30 ticks or 20 ticks, I'm going to take that. But that is not clicking buttons randomly. That is basically having a plan for a scalp. So whoever is doing 40 trades per day, at some point of their career, even if they're successful, that's going to come back to bite them in the end. Because if you look at the stats, the most active traders are the ones who lose the most money. They don't win money. There's very, very small percentage of scalpers even who do it the right way, who make money. But scalping is not about doing 40, 100 trades per day. Scalping is finding a smaller opportunity that you take very quickly, but it still has all of the hallmarks of a good trade. Positive risk rewards, limited risk, good trade location, all of that has to be there. Good direction in the lights of whatever is happening. You know, it is market generated information, all of the stuff that we do. But just thinking that you can do, about 10 trades in London so you can build up some buffer. That, for, I will say, 99% of the people is not going to work. I'm sorry. I've coached over 300 people myself. We have over 9,000 people on my various courses. And no one that I've coached has told me, hey, I made a ton of money trading with a negative risk reward, doing like 40 trades per day, building up a buffer by doing a whole bunch of basically bullshit trades, like, to be perfectly straight with you. Nobody has said that. But whenever we flip that around and we go, let's now look for logical trades that have a 2R multiples target expectancy in them with a limited risk, good trade location, and let's just try and do hold it until the target is hit. However, make sure that the targets are not too ambitious. Because if we only have, let's say, 100 ticks range for the entire area that we're looking at, looking to take 150, 200 ticks out of that range is not going to be very possible. So you're just going to be getting smacked in the face constantly. So our targets need to be logical in light of what sort of volatility we're working with what sort of liquidity we're working with. On NQ, I will always say translate ticks into points, and then you get the same thing. So if you're looking to bank 20 ticks in crude oil or something, that will be equal to 20 handles, 20 points in NQ. Right, so in 5 minutes, we're going to have a 15-minute chart ending. What am I trying to say? In 15 minutes, we're going to have the candle finishing this particular period. And if we have a bearish engulfing of some sort, that would represent a rejection of VWAP. So I may have a short trade there that I was looking for earlier. All right, let's see some more questions. Do you actively trade NQ? You do oil. I don't actively trade NQ. No, I haven't done it actively since 2 years ago. So I have done it during COVID quite a lot. But recently I popped in a few trades in NQ, but I still prefer ES, I found, because it's slower. And anyways, when you're trading NQ, you still have to look at the ES chart anyways. And I always find that every time I'm referencing NQ levels, it just doesn't respect them. But if I combine it with ES chart, it totally respects them, right? Because you have the ES levels and then you wait for NQ to do its craziness. And then once ES is at the level, you effectively look for the price action signal on the Bookmap or wherever you get it, or, candlesticks, however you trade, you look at it on NQ. So it's always looking at ES, maybe trading NQ. But I'm still not that happy trading it because I think that it's very erratic and it's less so I might get used to it at some point. But no, I haven't traded NQ actively. But have I traded it in the past? Yes, loads of times. Just intra-candle nervousness has made me move away from it. I've spoken about this before. I do have a chronic illness, whatever, and it made me light and noise sensitive. So I found it very difficult to actually keep staring at NQ with the intra-jitteriness candle. So that's kind of going away now. I'm feeling a little bit better these days, but I'm still not, I find it makes me anxious, and I don't like being anxious when I'm trading. I like to be in a Zen state. So whatever happens, if I'm, down in a trade, that's fine. But if I lose that Zen, if I start getting annoyed by price action, that's the sign for me to just step away from that product because it's at the moment not matching my personality. So I need something that is pretty Zen-like, and this is why DAX is pretty cool. Now, crude oil, even though it looks a little crazy sometimes, it's actually pretty Zen, to me at least. Once you get the reversal, you typically get that follow-through pretty quickly, or at least you should. If you don't, obviously, there's something up that day, or we're in a quieter day. But yeah, so NQ, I don't actively trade. I think we've got enough NQ traders, don't you think? Okay, so somebody else says, I'm looking at delta in that zone. The magnitude of delta is very, very small in that range despite the large move. This is something that we don't usually see in NQ. Is it normal in CL? Yeah, so delta is not that useful to me in crude oil. It's never really given me any sort of a valid signal like it does in equities. Now, we have to take into account that crude oil is not an equity index. Crude oil is an actual commodity, with actual physical supply and demand. And it is very much driven by hedgers. Whereas ES, I would argue that it's mostly, especially NQ as well, that those are mostly driven by speculators, right? I wouldn't say, even investors are speculators, right? But the crude oil and gold markets have a different function to them. They have a function of being products that producers typically use to limit their risk. And that causes a whole bunch of different things in the market. So I've never looked at delta as something that I can use in crude oil or gold for that matter, primarily because of those differences in what those markets actually are. All right, so bearish engulfing is on the cards here. But I'm going to see if I can get a bounce up to the round number of 73, which is also where the equilibrium kind of shifted downwards. And then we can see if I can run maybe a stop of about 25 ticks just to take that top area here. I don't really want to jump into this now because we've built profile. We're actually building profile. Let me see if I can change this. Right, let me get another indicator here. Volume profile fixed range. Okay. Yeah, so right now we're not building a nice move downwards. We are just printing volume and structure inside this whole area here. So this could be, this could be a range that gets established and, keeps all the way up until the regular trading hours. But I still think that we may, because we rejected VWAP, we never reclaimed it, that we could have some movement. But I want to get a really good trade location, and getting involved just sub the round number on a day when we're building structure, that's not really on my agenda here. So 73 would be a good entry here with a stop of about 73.25. Again, not a signal service, guys. This is not a signal service, so do your thing. Don't follow me. I don't even have a trade on right now, so do not follow me. This is all informational and educational. We put a disclaimer up already. Kazar says, hi Dee, thanks for valuable info. I wanted to ask which instrument stays range bound the most according to your knowledge. Bonds. If you want an instrument that doesn't move, go to bonds. This is why spread trading in bonds is something that that is a big thing that a lot of prop firms are doing. You can ask Jack all about it, but if you want something that stays range bound, fixed income is where it's at. Jesse James, day for Asian high-low, do you use 8 p.m. to midnight EST, 1 a.m. to 5 a.m.? So what I use is actually the Shanghai exchange, because I did some of my, well, not me just alone, but my team. We've done some tests over what sort of a range is the best for determining the Asia high and low as some kind of orientation points. And bizarrely, we came up with 1:30 a.m. BST up to 7 a.m. So that's basically Shanghai hours. So when we have all of the Asian exchanges kicking in, so we have Sydney, small exchange, pretty much like Eurex sort of thing, and then we have Tokyo that kicks in at midnight, and then we have Shanghai, and I believe Singapore as well. And once all of those are in, that's when you get like the most amount of volatility and movement. So we actually started using 1:30 a.m. up to 7 a.m. as a reference for the Asian lows. And in our Blatek DR indicator and Blatek MP indicator, those are actually set as default because of that. Because, we've done tests, we found statistical advantages to use that, and that is what I use. Come on. I'm going to put a limit order at 73. Not something I do a lot, but I am talking, so don't necessarily want to miss that. And I'm going to pop in a 2-lot trade for 500 risk. And then going for $1,000 on the risk reward. Okay. Edward says, Dee, if you only have one of two options, which instruments will you trade for the rest of your life? Thank you. Or yes. Why those two? I would probably say neither of those. CL would be the one that I would choose, because even though we're having a year where it's a little bit weird, it's still, the instrument has been my bread and butter for 11 years. But if we're talking like equity indices, I would actually also move away from those two, and I would say DAX if we're just focusing on indices. At D, is NK a time-driven instrument? I've noticed coming into the MI session, it's almost always flashy. I have no idea. I've never, well, not never. I think I did one Nikkei trade in my life. And that was when I was on a tour around Asia, and I was a bit bored. So I looked at Nikkei, and that was the only trade. I did make money in it, but it was the only trade that I ever did. So I have no idea. That is a question for Dakota. That is his instrument. So please, go to the slow markets class and ask him whether that's something that he thinks is a valid approach for Nikkei. I will never try to answer questions that I don't know the answers to. I think I know a lot, but at the same time, there are things that I am not an expert in, I've never traded, and I will never claim to know how that market operates. Every market has its quirks, so even though, we are looking at the price and, similar things, there are quirks. I, for example, know that ES moves quite a bit after 7:30 p.m. my time. And I know the type of setups that I've observed for a long, long time now. But I also know that crude oil does nothing at that time. So for me to try and trade crude oil at the same time, 90% of the days I would be sitting there watching paint dry. So we don't want that. So that's the behavioral quirk. And if you don't know those, I constantly see people in chat a lot of the time crude oil is closed and they're like, long crude oil. And I'm like, but why? Like, you'll be in a trade for 2 hours. Just poor you. Like, that's all I'm going to say. Poor you. So we have to know the times of day when our products are mostly trading. The reason why I'm attempting these trades in crude oil is because we've had 2 weeks of London-driven moves. And then we get to NYMEX and we get stuck in like 105 tick range. Yesterday was an outlier, but the previous day was so dull. Like, I did do a trade, but let me go back. So, was that Friday? 16th? So, what was it, Thursday? I can't go. Oh, yeah, here we go. So, London goes into this huge, huge move. And I, of course, am staring at something different, right? I'm not looking at crude oil because I'm like, well, I only trade crude oil post on my gut and post initial balance. And then we go through the overlap, which also brings a pretty good thing. And then we get to the regular trading hours when all of the action is supposed to be happening. So I'm thinking, oh, this is going to be good because we have a lot of volatility, everything. And then I do my reversal trade and I get stuck in barely 43 tick range. I sat in this trade for like 2 hours and I finally killed it at like plus 5 ticks. I was like, well, this is great. So yeah, this is why I'm attempting crude oil trades, because I've observed that something has changed a little bit and that we need to maybe give a little bit more attention to crude oil during London. Yesterday was again a boring beginning of the session, but still followed, some pretty decent moves. Oh, we're in. Okay. All right, this is where I would be looking for Bookmap to show me the way. You're basically just looking at, actually you can look at time and sales, but it's a lot more messy for me. But let's utilize this platform a little bit more. I hear they're bringing the heat maps. They're going to bring a heat map as well. Similar to Bookmap, and that's already planned. What are we looking for? Crude oil. All right, so we're looking for some sellers to come in here. And not with one lot either. Like, we need some bigger size here. So far, it's all just pea shooter buyers, like Hogue likes to call them. These are all small players right now. Oh, Suri has a good question about DAX. What do you think about DAX where it is now? I think we have decent chance for a short. We did go into neutral day type with a failed auction, but I think that it's time for a little bit of a reversal, primarily because we have the weekly supply that we reached, and it was a pretty big run. So if you can find some kind of a bearish engulfing, maybe a little bit higher up if we look at this as a range. 185.50 might be a good area. But so is 185.39. So that's where I would be looking for a short. However, if it goes lower without actually going anywhere near those levels, you can use a bearish engulfing on a 15-minute chart as a downward move. So there's a consolidation there now, and if it goes lower into the bearish engulfing on the next candle, that could be your entry into a momentum trade move. Right, so we don't really have any serious sellers coming in here. We're back at VWAP. These are pretty big candles in crude oil. Don't really like that. No, this is not looking right. But I'm going to let it play out. Smack. There we go. Minus 869 there. And that, now that this has failed, puts me onto the third and final setup of a neutral day and a stop run. And then a reversal. But I don't think we're going to get that during the live stream. However, what I normally would like to see is the stop run around. Okay, let me give the price from here. Stop run above 73.34. So it's got to be above that. And then exhaustion candle that comes back into the range. Otherwise, I have no more setups on crude oil. I'm not looking for longs, at least not until we have some more dedicated reversals. But yeah, 73.34 will be my next area of interest. So just how it is, try a short at VWAP. It went higher. This is now looking like a range-bound day. And therefore, third and final hypo. If that doesn't work out, that's it for the day. So you can't just keep clicking buttons because that's, So you have 3 setups. Neither of them work out. It's time to call it a day and wait for something else. And we are in August. This is why I'm on combines. I'm not putting any live money in these sort of conditions. But yeah, so this is now looking like we're going to have a range-bound day for London and maybe some action during NYMEX. So maybe one idea would be to actually run a momentum trade if it occurs during regular trading hours, which is what should be happening. But it hasn't been happening recently, so we have to try these things. The setups and levels remain the same. We still have initial balance, neutral day type, momentum day, failed auctions, sustained auctions, VWAP, all of that. So for now, crude oil, range-bound, barcode-y. And I try to trade from VWAP, which is technically the middle of the range. So I always go through to these like critiques. So it's like, okay, so I tried 2 trades. What could have been done differently, right? So I could have said, well, this is now a range-bound day. Let's look for the neutral day type to happen before initiating a trade. But I think in light of the day time frame and this massive jump off a cliff, this was actually a pretty valid setup for me. So I don't have much problem with my decisions there. It's just that maybe I should have put the neutral day type higher up in the hypos. So that would be my critique here. So right now there's nothing, even if it goes below VWAP, I'm not interested in it because that's not what I was looking for. I was looking for the price to stay below VWAP, not to go above it and then start messing around. And that's a hallmark of a range-bound day. So that means I need to wait for an appropriate location in a range-bound day, which we don't have right now. So yeah, a little bit boring, I would say. Was hoping for a nice kind of easy momentum trade, but it's just not the day for that. Reading Group says, I'm trying to make the transition from manual trading to algorithmic trading because it's both useful for my job and also cool to remove emotions from it. Oh boy, are you in for a bit of a surprise? So algorithmic trading is not going to remove emotions from you. If you cannot control your emotions as a manual trader, you're not going to be able to keep your fingers off your algorithms either. They typically don't perform as well as human traders. I would say that. Especially not algorithmic trading, where you think you can just run an algorithm and not be involved in it at all. So let me tell you about a job that's called a quant strategist. They are people who work for hedge funds who switch on and off the algorithms appropriate for the market state and the momentum and volatility that they have at the particular time. There's this misconception that algorithmic trading is you write an algorithm, you let it run, and you never get involved. That's nothing is further from the truth. If you think you're going to get an algorithm that's going to perform without any human involvement, that's going to be a big sort of bubble burst for you. Let me just clear my throat for a second. If you ask Robert Cooney about algorithmic trading, you can take a look at it from the point of view of making trading slightly easier. But if you're expecting it to completely not play with your emotions, that's going to be not true. One thing I will tell you, my experience with algorithmic trading is, what is going on with my throat, is that I'm turning into Michael Patak now. I'm just constantly clearing my throat. So, the algorithmic trading should be looked at as something that can somewhat help you. But if you're expecting to have multiple conditions, I would say that's the wrong approach to algorithms, because this is something I had to learn a very hard way. Because I actually have a lot of algorithms that I run myself, but they're all based around a single idea. Then it's not based around, let's do initial balance high, and then if we reach ADR, we can do a reversal. You can't do that, okay? Because the algorithm is going to get confused. It's going to get itself in a tizzy, and eventually it's not going to be doing the right trades. So separating your separate algorithms into a singular idea that has no more than 3 conditions, that has been very helpful for us. So that is the first mistake people do, try to pack in too many things into a single algorithm. So don't do that. But expect that you will need to actively manage that algorithm. So you have to be your own quant strategist. You will have to decide when to switch it on and off and when to meddle into it when you see it's doing something that it's not supposed to be doing, or when you've noticed the market state change that the algorithm just hasn't picked up because it's a relatively simplistic code, right? So those are some of my experiences with algorithmic trading. All right, let's take another question and then we're gonna finish it up. Hey Dee, for gold, are there any weekly type of news other than the red folders that tend to influence price? Any sort of geopolitical on-the-fly news relating to the Middle East, relating to elections, relating to any ad hoc speeches by the Fed members, all of that can influence gold. Gold is a geopolitically sensitive instrument, so anytime there's something happening, it's going to react, sometimes quite violently, and the ability to take advantage of that is sometimes actually impossible because it's the algorithms. They are kind of constantly monitoring the news, and then when they hear something that they think they can take advantage of, they will kick in, and we can't fight that. So when you see super massive moves, do not fight that. Either take profits or exit the position immediately and reassess. If you happen to be on the right side of that move, well done you. But on a lot of the days, that's not going to be the case. I had quite a few crude oil trades that I was lucky on. It just kind of smacked back into my target, and that was it. All right, so I'm starting to get frogs in my throat. I have no idea what's going on, so I'm going to finish the stream here. Thank you for being here with me. As always, very intelligent questions. Let's do this all over again tomorrow morning. Don't forget that we now have 6 days of programming. So we have Nick for a Tick kicking off things on Sunday with Globex open at 4:45 p.m. Central. Then we have Slow Markets with our lovely Dakota at 7:30 p.m. Central. We also had it at the buzzer with Coach Jay. I love Coach Jay. I've worked with him a lot, and he is an awesome dude, very good trader, awesome at levels. Like his levels are just awesome, and amazing at volume analysis. So I've learned a lot just by watching him. Obviously, we have London Open with me. You are here. Yes, so 3:30 a.m. Central, 9:30 a.m. London time. Now, when it comes to the main programming today, we have the fast markets, obviously, and we have Dr. Brett Steenbarger today. Yes, he's going to be on with Hogue, and he's going to be doing a special Ask Me Anything session with Hogue. Now, we do have a link for that, so I'm going to put that into the chat. So there it is. If you want to ask Brett anything relating to psychology, he is an amazing, amazing psychologist. I've learned a lot about him. I keep watching and rewatching his videos every time I need a bit of, like encouragement, or just like to shift my focus away from P&Ls and stuff and into the right mindset. He's amazing. So do check him out. Until tomorrow, I will see you very soon. Take care. Have a good rest of the day.